Hi, good morning. Today's topic is GST in Teleprime. We will now enable GST for this company and record the registration details. Later, we will record GST compliant transactions and generate accurate GST returns. The business scenario is Dakshin Electronics Private Limited started the business in October 2020 with a capital of rupees 50 lakh. The company started recording compliances related transactions from 1st October 2020 in Teleprime. The company trades in wholesale and retail sales of electronic goods. The company also provides maintenance services on the selected electronic goods. The company is registered as a regular dealer and under the Goods and Service Tax Act. The company deals in different brands of television, LED lights from home decor, washing machine and mobile phones. Most of the electronic goods will attract on 18% GST rate. Therefore, the company decides to define the tax details at the company level. Further, the stock items other than the 18% rate will be defined in the same stock item or the stock bill. Applicable from 1st Jan 2021, the company is all set to implement GST e-invoicing in the business and decided to issue e-invoices to all the B2B supply transactions and reduces issuing manual tax invoice. The company has an account in Kotak Bank current account for business purpose. Next is creation of company and activating GST. So I have created this Dakshin Electronics Private Limited, a new company for calculating GST. The first step in working with Teleprime is to create a company. The company in Teleprime is a central repository where we can maintain all the financial records of our business. And we can extract the required financial reports and statements. So for this, we have created this company, Dakshin Electronics Private Limited. Now, the first question is introducing capital into the business. Initial capital is the money invested by the business owner and managing director to set up a business, and the money invested to start a business is also called startup capital. In Teleprime, we can record the receipt or journal voucher for introducing capital in the business. The first question says that as on 1st October 2020, Mr. Chandan, Managing Director of Dakshin Electronics Private Limited, introduced a capital of 50 lakh. State Bank of India check white number 950005 was deposited in the Kotak Bank current account. So for this, I am going to open my receipt voucher by pressing F6. Here what I am going to do, I'll press Ctrl plus H and I'll enable my double entry mode. Here I'm gonna create a credit account of owners capital account. Under capital account, and will credit 50 lakh and debit my Kotak Bank current account. It comes under bank account. And here I will enable the check range from 95005 to 95006. Here I'll write Kotak checkbook 1. And you can see that the current balance of Kotak Bank current account is 50 lakh now. Here I'll write down the check number 95005 and will specify the bank name, that is Kotak Bank Current account. Alright, so this way the entry has been done. Now, displaying chart of accounts. Tally Prime provides flexibility in setting up a chart of accounts. Tally allows us to group ledger accounts right at the time of creating a chart of accounts. List of accounts in Tally displays the existing chart of accounts listed as groups in alphabetical order. Now, the next topic is hierarchy of calculating tax in transactions. In Tally Prime, we can define the tax rate at any required level such as company level, stock group level, stock item level, accounting group level, accounting ledger level, and the transaction level. Once after defining the tax rates, to calculate the tax rates automatically in Tally Prime, firstly Tally will search the tax rate at the transaction level, and then at the accounting ledger level, then at the accounting group level, then at the stock item level, then at the stock group level, and at last at the company level for GST calculation. For example, if the tax rates are defined at the transaction level, then it will not search for the tax rates in other levels. If the tax rates are not defined at the transaction level, next it will search at the accounting ledger level, and if it is defined at this level, then the same will be taken for tax calculation. If the tax rate is not defined at the accounting ledger level, then it will move to the next accounting level, that is accounting group level, stock item level, stock group level, and finally at the company level till it gets the tax rates. First scenario is if the 28% tax rate is defined in the stock group. Tally Prime will search for tax rates at the transaction level first, accounting ledger, accounting group, stock item level, then the stock group. In this case, the tax is defined at the stock group level, hence 28% tax will be considered for the calculation. Scenario number 2. If the 5% tax rate is defined in the stock item, Tally Prime will search for tax rate at the transaction level first, accounting ledger, accounting group, then the stock item. In this case, the tax is defined at the stock item, so it will not consider accounting group 28% rate, hence a 5% tax will be considered for the calculation. Scenario number 3. If the 18% tax rate is defined in the accounting group, Tally Prime will search for tax rates at the transaction level first, accounting ledger, and the accounting group. In this case, the tax is defined at the accounting group, so it will not consider the stock group 18% rate. Hence, 18% tax will be considered for the calculation. Scenario number 4. If the 12% tax rate is defined in the accounting ledger, Tally Prime will search for tax rates at the transaction level first, and then the accounting ledger. In this case, the tax is defined at the ledger level, so it will not consider the stock group 12% rate. Hence, 12% tax will be considered for the calculation. Defining GST rates at company level. For businesses who are dealing with a single stock item or different stock items with the same GST rate, then the GST rate can be defined at the company level. Dakshin Electronics Private Limited deals in different brands of television which attracts on 18% GST rate. Therefore, the company has defined tax details at the company level. In this section, we have seen how to define the GST details at the company level from the company feature alteration. Now I'll show you practically how I'm going to do the entries of advanced GST. So the first entry says that as on 1st October 2023, Dakshin Electronics Limited purchased the following goods from Durga Enterprises, Karnataka on credit with supply invoice number DE/PUR/190. So here I'm going to open my receipt purchase voucher by clicking F9. I'll change the date from 1st October. Supply invoice number DE/PUR/119. Party account name will be, I'll create the party account name. We are purchasing the stock items from Durga Enterprises. It will come under sundry creditor. I'll create a purchase ledger over here. Purchase account. Now enable set and alter GST details. Here I'll add Samsung 32 inches LED TV. Nature of transaction will be purchase, taxable. Tax rate will be 18%. Type of supply will be goods. Here I'll add the stock item Samsung 32 inches LED TV. LED TV. I'll create the units numbers. NOS. Yes. Description is Samsung 32 inches LED TV. Taxability taxable. Here I'll keep 18%. Tax. Quantity is I am purchasing 5 LED TVs at the rate 18,000. The total amount comes out to be 90,000. Next stock item is Samsung 43 inches LED TV. It will come under numbers. Here I'll set the GST details. Samsung 43 inches LED TV. Taxability taxable 18%. Five numbers at the rate 30,000. Next is now I'll create a ledger over here. Here is central tax. I'll create a ledger over here. Central tax at the rate 9%. It will come under duties and taxes. Tax type of duty will be GST. Tax type will be central tax 9%. You can see the total tax has been calculated 21,600. That is 9% of 2,40,000. Next is I'll create another ledger. State tax at the rate 9%. It will come under duties and taxes. Type of duty will be GST. Tax type will be state tax 9%. So you can see that the same tax has been calculated over here. So this way this entry has been done. Alright. The next question is, as on 2nd October 2020, Dakshin Electronics Private Limited purchased the following goods from Pooja Appliances, Karnataka on credit with supply invoice number PO PA/PUR/22. Okay. So here the supply invoice number, I'll change the date to 2nd October PA/PUR/22. Party account name is Pooja Appliances. Pooja Appliances. It will come under sundry creditor. Here I'll select purchase ledger. Now here I'll create two stock items, LG washing machine. It will come under electronic products. Units will be numbers, and here I'll set and alter GST details. LG washing machine, taxability taxable, tax rate will be 18%. Quantity is 5 numbers at the rate 15,000. Second stock item is Philips LED floor lamps. It will come under electronic products. Set and alter GST details. Description is Philips LED floor lamps. Taxability taxable 18%. Quantity is 5 numbers at the rate 12,000. And now I'll calculate central tax. So you can see that 9% of 1,35,000 is 12,150. Now I'll calculate state tax. So you can see the same tax rate has been calculated over here. Alright. The next is intrastate outward supply of goods. Outward supply will constitute the supply of goods and services of the transaction of sale, transfer, barter exchange, license, rental, lease and disposal of goods in the course of business. Issuing GST compliant invoices is very critical under GST for error-free return filing. Since Dakshin Electronics Private Limited is a registered dealer, they need to record each sales transaction with all required details for GST compliance and file the returns in GSTR 1. So here what I'm gonna do, I'll open my sales voucher. Here I'll add the reference number. The question states that as on 2nd October 2023, Dakshin Electronics Private Limited sold the goods to Bhavani Enterprises Karnataka on credit with sale bill number 1. So they are selling Samsung 32 inches LED Smart TV and Philips LED floor lamps. So here what I'm gonna do, bill number is 1. Party account name I'll create Bhavani Enterprises. Under sundry debtor, now the sales ledger is, I need to create sales under sales account. Here I need to enable GST details. Here I will add electronic devices. Nature of transaction will be sales taxable 18%. Type of supply will be goods. Now, here the first stock item is already created by me, Samsung 32 inches LED TV. Second, at the rate 18,500. Next is Philips LED floor lamps. Second, at the rate 13,000. Next is Central Tax. Central Tax, you can see that at the rate 9%, Central Tax of 9% at the rate 63,000 is 5,670 rupees. State tax is 5,670. Alright, so this way this entry is done. So I hope it is clear from all the practical aspects of GST that how to calculate intrastate purchase transactions and how to calculate intrastate sales transactions. So I'll get back to you in next videos with some interesting practical entries of GST. Stay tuned with me. Thank you so much.